Okay. So today we're talking about calculating prices, how to count your pips. Very imperative, important topic. Let's hop right into it. Share my screen real quick. All right, so you guys should be able to see this little presentation slide I put together for you guys. How you want to calculate the price is going to depend on what kind of pair you're trading. Today, we're only talking about trading major and minor pairs. So that's anything to do with GBP, JPY, USD, AUD, CHF, AUD, all of your CAD, your minor major pairs. So anything that does not have JPY in it, you're going to find your pip in the third and fourth digit after the decimal. Example here, GBP USD, 1.2170. The pip is 70. So if 70 goes to 71, that's an increase of 1 pip. And then any pair that has JPY involved, whether it be USD JPY, Euro JPY, whatever the case, if there's a JPY on the end, you're going to calculate the pip with the first and second digit after the decimal. Example here with USD JPY, you got 106.228. The 22 is your pip. And you can see that because it's highlighted as the larger two numbers in the price. You will see that on your trade screen if you're using MetaTrader 4. The pip will be highlighted for you as the largest numbers in the price, and the pipette, which is the smallest unit of price, which is basically a tenth of a pip. So for instance, 29.1, you would look at as 29.1. And in order for that to go up to 32, it would have to increase not by 3, but by 2.9, because you'll have 9/10 of a pip added to the 1, which will bring you to 30, and then you add 2 to bring you to 32. So that's how you calculate the price. That's how the pipettes work. And just to show you a quick example, hopefully you can see my phone up on the screen here. I have a order screen ready to place an order for GBP JPY. So I'm just going to hit the plus button for stop loss and bring it to an even 1.2920. So obviously JPY pair, first and second digits after the decimal are going to be the 2 and the 0. So right here we have 129.20. 20 is the pip. Now, the price has to move by the smallest unit, which is a pipette. So as this increases, you're going to see the last digit increase one number at a time. I'm going up a tenth of a pip at a time. So once we get to 129.21, that's an increase of 1 pip. 129.22, 2 pips. Hopefully you get the point. If I were to add 78 pips to 129.22, it would take me all the way up to 129.99. Come on. And the only reason I'm holding the button like this, taking this time, is for illustration purposes. Hopefully you guys can see the prices increasing 1 pip at a time, in the 80s now, 90s. And what happens once you get to 99, since it's nowhere else for the numbers to go, is going to travel across the decimal. So in order to go from 129.99, if you increase that by 1 pip, you're going to 130. So the number before the decimal, or in the case of a pair without JPY, it would just be the second number after the decimal, has to increase in order for you to get to that next 100 pips, so to speak. So to decrease this by 100 pips, I'm going down to 128. decrease it another 100 pips, I'm going down to 127. So that's how you count your pips. That's how you recognize them. And you can see right here, let me go into how to read the spread. So the spread is going to say a double-digit number, but you really want to put a decimal after the first number. So if your spread is 29, you read that it's 2.9 pips. And you can see here on the calculator, if you subtract 32, if you take 32 and subtract 29.1 from it, you get 2.9, which is your spread. Over here, same thing. The spread says 20, so you'll read that as 2.0 pips. And if you add 2 pips to 1.21706, you get 1.21726, an increase of 2 pips. So that's how you calculate your spread and know how much it's going to cost you to enter that trade prior to entering that trade, which is something you should be in good practice of. Now over here, I prepare a spreadsheet for you guys. Let's see. Boom. Okay. So over here on the left-hand side, I have your lot sizes, which is how you're going to determine what each pip is worth in your trade execution. Of course, the smallest lot size you can use is 0.01, which is your micro lot. So your micros are here. Your mini lots start at 0.1 up to 0.9. And then, of course, a whole lot would be a 1.0 and up. So when it comes to calculating the price, there is actually a formula involved where you will have to calculate not only the current price for that pair, but you'll have to use a little bit of math to determine what the pip is worth at that exact second. The purpose of this spreadsheet is to show you a little bit more of a basic way to do that calculation. If you don't have a Forex calculator handy or you don't want to do the math by hand. And this is really only going to be helpful to you, once again, if you're trading your major and minor pairs. The reason for that is this basic calculation that I have used for the spreadsheet is really only comparable to Euro USD, which is the standard for price calculation as far as Forex is concerned. So with Euro USD, your micro lot or 0.01 lot size is going to be worth about 10 cents per pip. Now that's going to differ and depending on what the current price is, but it's going to be very close to 10 cents per pip. And once you venture out into your minor pairs, this 10 cents might change to 9 cents, or a dollar might change to 93 cents, or $10 might change to $9.33. But once again, very close to the standard calculation. So if you're using this math in your head when you enter your orders, you'll at least have some idea of how much that trade is going to be worth without having to take a bunch of time to do the math. And you can see how it adds up. 10 pips, 20 pips, 25 pips, 50 pips, 100 pips. I took the liberty of putting the corresponding time frames you will probably be looking on to catch this kind of a move. So of course, if you're looking for 10 pips, you're on the lower time frames. And if you're looking to catch 100 plus pips, you're on those higher time frames, maybe even up to the monthly. But per pip values go up as you increase your lot size. So 0.01, 10 cents per pip, 0.02, 20 cents per pip. 0.1 $1 per pip, and 1.0 is $10 per pip. Right here in this third column, you can see where the spread is multiplied by the pip value. So this column right here is going to show you how much it costs just to enter a trade with the corresponding lot size if the spread were 2.1 or 21, for example. So if we have a 2.1 pip spread, which is pretty close to what a standard spread would be during normal trading hours, with a micro lot, it's going to cost you 21 cents to enter that trade. With a mini lot, it's going to cost you $2.10 to enter that trade. And with a whole lot, it's going to cost you $21 to enter that trade, as much as 210 if you were to use a 10 lot entry. So just keep that in mind. Those spreads will build up on you, especially if you're entering multiple trades at a time. You want to calculate for that spread you're going to pay the broker when you enter that position. And over here, you can just see how your profits will accumulate based on what your lot size is. So 100 pip gain for a micro lot is going to net you about $10 minus the spread, 21 cents. So about $9.79. Mini lot, 100 pip move is going to net you $100 minus your spread of 210. So about $98, $97.90, not bad. And then with a whole lot, 100 pip movement, we're talking about $1,000. And of course, the spread is going to be $21, but that's still a $980 profit on one trade. And don't let these numbers over here get you too excited. Keep in mind to use these larger lot sizes and chase these bigger profits. You want to respect your balance and use proper risk management. So in order to trade a whole lot, which is $10 per pip, yes, with $100 target profit, you're looking at $1,000. But even if you were going to use a 50 pip stop loss, you're talking about losing 500 plus the spread. So that one trade with a 50 pip stop loss and a whole lot size is going to cost you $521. And if you divide that into your total balance, how much of a percentage of that total balance did that 521 cost your account? And that's how you manage your risk. You would say, for instance, if I have $2,000 in my account and I just lost 521 using a whole lot, I just lost a little bit north of 25% of my account. Was it smart to risk 25% of my trading capital on one trade? More than likely, no, but that's going to be based on your personal strategy, your preference, what your win rate is, or your success ratio on wins versus losses. And then, of course, in respect to your balance, how many losses can you sustain at that risk rate before you blow your account out? So this is the math you want to be doing. The better you get at it in your head, the quicker you're going to be able to execute. So I definitely hope this was helpful for you guys. Got a whole lot more material coming for you. Make sure you subscribe down here. And then there's a little bell icon right beside the subscribe label. Hit that bell, and every time I drop a new video, you're going to be notified. You'll be one of the first ones to get to view it. So I really appreciate all you guys continuing to support me. Watch my material. Stay tuned, and good luck on the charts.